as we mentioned, we are the Vancouver Life Real Estate Group, and today we are talking about what is actually happening in the Vancouver real estate market. So, as we have all heard, Canadian real estate sales have surged 45%. Taylor touched on this a couple of times, and yeah, who would have seen these kind of numbers coming, back in April?
Yeah, September sales volume, as Taylor also mentioned, is at an all-time high. We've actually never seen sales numbers this high in recorded history.
Yeah, and because of this, we have only 2.5 months of inventory across Canada. This is actually the lowest it has ever been in our nation's history. And essentially what that means is if no new homes came on the market for sale, all current homes for sale would be gone in 2.5 months.
Right. So when you have a limited supply, that is now pushing the price point. So when you look at the average prices over the course of a year, we've seen them grow by 17.5%.
This is an all-time high for Canadian home prices. Further illustrated here in this graph, we are at about $640,000 for your average home price across Canada.
Yeah. So now if we look at Vancouver and what's happening here, as we stated before, September is again the highest it's ever been, up 56% year over year.
So let's look at prices now. If you can believe this, both the average and median sale prices in Metro Vancouver are at an all-time high. There is your average sale price. We're just over 1.1 million. And yes, if you look back at 2016, anyone living through that market knew how absolutely insane it was. We're actually above that price. And looking at the median sales price, this is also at a record high, sitting at $835,000 today.
That's right. So now we start looking at sales, which are up 44.8% above our 10-year average, right? So that's a tremendous amount of activity that's happening in our marketplace right now.
So understandably, this is inching prices upwards. We're about 0.3% over last month and 5.8% year over year.
And this has now pushed all property types from single family homes all the way down to tiny condos into a seller's market. However, it's not quite that simple.
Yeah, of course, we're talking and we are bundling all property types and all of Metro Vancouver into one sort of statistical data point here. So we're going to dive a little bit deeper and realize that, yes, as Ryan said, there are sort of differences happening between which type of property or asset class you're looking at.
Yeah, it's the tale of two markets because as we're well aware, we're seeing a fairly big repurposing here where people are leaving sort of that condo densified living and are moving out to the suburbs for more space. And in Vancouver, you can do that for very similar dollars.
Right. So let's start by looking at our detached home market. Detached home is clearly where the interest is right now of all the three property types, with sales up 76% year over year.
Yeah, this is a 10-year high for sales volume, right? And that also puts us at 27% above the 10-year average.
Here's a chart that shows you all the September sales data for detached home over the last 10 years. Clearly, last month was the highest during the last decade.
The pandemic is definitely playing into this too. I mean, you can kind of see that inflection point there early in 2020, and it just kind of shoots out.
Right. Oh, sorry, I just jumped it back there. There is the chart that Ryan was talking about.
Sorry.
Okay. Further to that, this is a huge number. The detached inventory is at a 15-year low.
Right. So that pushes your average sale price for detached homes up 13% year over year.
Right. The benchmark price, another indicator, is up 7.8% year over year.
Which puts our average detached price point at 1.507 million.
Mm-hmm. Now, we definitely want to touch on townhomes here because we're really looking at detached versus condos, but townhomes are acting very similar to the detached home market.
Yeah, what's really interesting about townhomes is you often get to stay in the same neighborhood that you might live in already. You can't afford that detached home. So the activity levels that we're seeing around townhomes, they're actually surpassing detached homes right now. And that's due in part because you get a lot of what you're looking for roughly half the price.
Yeah, so you can live in the same neighborhood, get similar square footage, similar bedrooms for half the price. You're just not getting the amount of land that you would obviously get with a detached home, for example. So looking at this, this is your 15-year low chart of inventory for detached homes.
So the tale of two stories continues because when you start looking at condos now, even though condo sales are up 37% year over year, a phenomenal number, that also puts us at a 20-year high in terms of sales volume.
Yeah.
but it kind of stops there.
Right. So yeah, the numbers so far sound exciting. And again, there's your chart showing you the 20-year high in sales volume, but this is where things start to diverge.
Yeah, so our listings right now, they're way outpacing the demand for condos, and that's due in part to what we just touched on there. It's what people are looking for. There's a big repurposing or reshuffling that we're going through.
So up 44% from last year, or an all-time high for the month. That's listings that we're talking about here. So a huge jump in the new listings that are clearly outpacing the purchases.
Yeah, and that puts our inventory now at a 6-year high. So you've got detached at 15-year lows, and you've got condos at 6-year highs. So there's people are moving in and out of asset classes here.
That's it. And as a further example to this, in the downtown core right now, for the first time in over 6 years, there are over 1,200 active condo listings right now.
That's a lot.
Yeah. So here's a graph of your listings, and then this is your inventory. So you can see a clear definition of an upward trend there.
Yeah. So condo prices, generally speaking, down around 5%. Of course, this depends vastly on the area, but when you focus on the downtown core, where the vast majority of these listings are, 5% down.
Yeah, that's so far. And we believe that this downward price pressure is going to continue for the upcoming months. And that's based on a few economic data points here.
Yeah, condo completions, so new condos coming to market that have been under construction, they're all coming to completion now. So we're about to see a fairly large influx of more inventory, right?
Yeah, so here's your new construction, obviously at an all-time high as well. So you got condos that are completing about to be an all-time high, as well as new condo construction as at an all-time high, rather.
And then conversely, you've got detached construction at 6-year lows. So we kind of, nobody foresaw what was going to happen with the pandemic, and the way we were dealing with increasing levels of immigration and things like that was through the border. I mean, we were at 27,000 people a month coming through the border. Now we're down to 4,000, 3,000, right? So we had all these condos that were being built for this demand, and we put a hold on that. Now we do think that the condo softening is only temporary due to this fact.
Yeah, let's not forget, it was only back in February when we basically were all screaming for affordability and for more condos.
That's right.
So again, this is just the pendulum swinging way out, and it will come back. This graph here is your indicator of the new condo construction happening across Canada.
But the assault doesn't really stop there, because Vancouver is also being subjected right now to extremely high insurance deductibles, right? We're seeing as high as $350,000, $400,000, right? And premiums have also risen.
Sure. Yeah. Your strata rates are having to increase because of this and having to cover it. So, it's not uncommon now to see 2-bedroom condos with a $700+ strata fee. We've come across $1,000, $1,100 strata fees in the last couple months here for your downtown 2-bedroom condo.
Yeah. We're also seeing that also for new condos with developers that don't have the reputation that an insurance company needs, right? So, we're seeing it in new property too. But also, when you add content insurance to that, it's just further, it becomes more and more expensive to own a condo right now, whereas you don't necessarily have these fees when you move into unstratified units.
That's it. Of course, a lot of investors who owned Airbnb units had to flip those either into long-term rentals or to sell them, right?
Yeah.
Some people, I think, maybe panicked and thought that they would have to unleash this product. So that's resulting in, of course, further downward pressure on prices. But with all extra inventory hitting the market, we're also seeing downward pressure on rents.
Yeah, we've seen rents come down by 15 to 20%, largely in the downtown core as a result of this.
Yeah, some areas, of course, like San Francisco are experiencing even more extreme levels. We're hearing numbers down 30, 35%. Again, we believe this is temporary, but this is where we're sitting today.
Yeah. This goes on to our great reshuffling, the repurposing of real estate. So it's kind of been touched on a little bit in the presentations before this, but we have, generally speaking, a lot of people that come from around the world here, and they mass to the downtown core when they first get here. But a lot of these people who now work for Amazon, Salesforce, a big tech sector here, they don't have to go downtown and be in their office every single day. In fact, a lot of these companies have restructured to have a work from home model now. So we have these employees that are no longer really looking to be in the downtown core, but actually looking for more space, a home office. And this is putting that downward pressure on condos and more pressure, upward pressure on townhouses and bigger space.
So obviously we are at basically almost all-time low here in immigration, but we're hitting record sales. And that's happening because of all these lateral moves that are happening.
Totally.
Like Brian just mentioned, people maybe that are working from home, maybe they don't have to commute as much. They're basically, what we're seeing is people are maybe selling their downtown condo for, let's call it 800K, as this example shows, and they're repurposing that money and putting it into maybe a 3-bed home in the Valley or South Surrey or wherever fits them best, because they can get dollar for dollar more square footage, which, not knowing their future necessarily, might make more sense. Right?
Totally.
So there's some other notable real estate data that we really want to share with you, because this is stuff that is affecting the market quite greatly.
Yeah, there's a big demand for interprovincial vacation properties. We're seeing places like Soyuz and Kelowna, even where was it you were talking about?
Oh, Whistler.
Yeah.
And of course, Whistler prices are actually at an all-time high right now. Sunshine Coast has a huge demand, right? We're seeing prices up about 30% year over year. In fact, we were talking to a colleague who works there as an agent. She was saying 50% year over year price increases is what she is experiencing there.
And that's to that point. What's also happening is it actually isn't stopping there. We're starting to see this spill over into the luxury market. In fact, it's increasing at an increasing rate.
So the luxury market was pretty hammered on, after the taxes and whatnot were implemented, but the demand is starting to come back. And one of the things that we noticed the other day was 66% of all the homes sold in 2020 over the $8 million price point have happened in just the last 3 months.
So there's some big money moving in our city right now. And they're anticipating, I think, a lot of what we're talking about, right? And this drive and desire for more space, it's going to become harder and harder to find.
And this trend is continuing into October. We're going to see either all-time sales volume records for October, or probably a close second. And same thing on the luxury end. We're going to see this pace of 6-7 homes over 8 million selling per month happening in October as well.
But are we in a recession?
Because how is this happening?
What's going on right now? Because this is confusing. Especially when you look at the fact that unemployment hit 16%. It's the highest it's ever been. Right?
But when you dig a little deeper than that, one thing that you must recognize too is it was obviously the lower income service networks that were hit the hardest, right? The low income jobs were affected sort of the hardest and the deepest, right? But overall, the employment income only dropped about 5%, which was not that big of a decline.
So high net income jobs, they were relatively incubated. And that was because companies moved quickly to work from home and change their models so that people could continue working, right? There was an effect for sure, but as we're going to look at, it wasn't really as big as we might have anticipated.
Right. So looking forward, employment rates are now at about 9% nationally, and locally, BC is actually at 96% of its pre-COVID employment level.
Very resilient marketplace.
Yeah, true.
Right.
So let's talk a little bit about the government stimulus, or what is ultimately starting to look like an over-stimulus.
The CERB payout is actually double what the wage loss was. So our government has put in far more money than was actually lost, right?
Kyle Green, great job doing this. He talked about the Bank of Canada and the weekly purchases of the Canadian mortgage bonds. Pre-pandemic, that was sitting at about $250 million. And today in October, we are over $9 billion.
Yes.
So they are clearly supporting and propping up the Canadian real estate market.
Yeah, and it doesn't stop there, because the government continued to offer mortgage and credit deferrals. We're seeing that now come to an end, but this was a huge relief for a lot of Canadians. And as a result, a lot of Canadians actually saved a lot of this money, right?
Yeah. So this is also combined with what we've seen at interest rates at an all-time low. The banks are helping us basically be able to afford real estate, and for other people to be able to purchase further real estate.
Yeah, and these next two graphs are really interesting.
Right. So there's your graph of the Bank of Canada mortgage bond purchases. It's
coming to the rescue.
Yeah, there you go.
That's what that is.
And then, yes, this data only covers March to May. That's the most recent data we could pull, but it's likely going to look very similar to date. Either way, during that time period, you had a wage loss of about 20 billion across Canada, and that was overstimulated with a $40 billion payout through the curb payments.
That's right. And our response, actually, Canada's response was the highest, its fiscal response of the G20 countries, right?
Yeah, have a look at this graph. To the far left there, you're going to see Canada's response. Canada has stimulated on a percentage of GDP basis more and higher than any other of the G20 countries.
So how did this affect people, right?
Yeah.
Because it really improved consumer confidence. They had
Sure.
money when they didn't before, right?
That's it. If you have been able to defer your mortgage or debt payments for the last 6 months, but maybe you didn't need to, well, that money is now likely just sitting in your bank account.
That's right. As we touched on, the CERB payout was actually double what the actual wage loss was.
All right. The government offered a whole bunch of landlord incentives as well on both sides, renter and landlord, to help make sure that people stayed in their homes, but also could ideally maybe pay less if it was affecting their business.
Totally. Canada also offered a 40K business loan whereby you get to actually keep 10K of it if you paid back the 30, right?
Correct. Interest rates, as we touched on, all-time lows. These are all reasons that are feeding into current consumer confidence and giving them, the reason or incentive to buy real estate.
It's also kind of locked the money in the country because now with borders closed and only essential travel taking place, the money is going to be saved and likely spent here in the country, right?
That's it. So if you can believe it, Canadians have never saved more money. And that is illustrated here in this graph. So we are at a record savings rate, thanks in part to all this ballooning aid, right? We have a savings rate suddenly of about 30%.
Yeah, which is way higher than it's ever been, way higher.
Yeah.
Right. So
begs the question.
Yeah.
when will this end? Because this cannot continue at this rate, for sure.
Yeah, I mean, the mortgage deferral period, it's ended, right? So now it's time to start paying back some of that money.
Again, as Kyle had mentioned, the Bank of Canada has announced they are ending this mortgage bond purchase program.
But the interest rates will remain low. So that will help consumer confidence, it will encourage spending, and it will encourage economic recovery.
So while we like to give some examples of forecasting, 3 to 6 months out in a predictable market can be a challenge, but hey, we're in a once in a lifetime market, but we do want to give you our insights.
Yeah, I mean, as we've touched on, detached and townhomes and duplexes as well, they're really going to be, I think, the forefront of construction and what people are going to be looking for.
So we think these prices are going to remain trending upwards, though at a bit of a slower pace, a little bit more respectable and proper pace.
Sustainable, yeah.
Yeah.
The condo market, it's still likely going to suffer for the next 4 to 6 months. A lot of this depends on a vaccine. When do the borders open up? When do we start getting that economic travel back into the country? Right?
And we should say too, the condo market, if you look at downtown as kind of the epicenter, that's what's going to get affected the most price-wise, right? We are seeing some more suburban areas, and the condos there are actually getting a little bit more attention, of course, because we're talking about price point, and we're talking about condos with larger square footage as well.
Yeah.
Right? This is an overarching forecast we are giving. Of course, we want to talk to people individually about specific areas, but this is a general vision of what we expect to happen in the next 3 to 6 months.
That's right. So in short, don't panic, right? If you look at the history and you look at 2008, when we were in past recessions, we've recovered very well from those.
Yeah, I think if you look at all 3 recessions Canada's gone through, real estate is up tremendously after every single one. BC continues to be an extremely resilient marketplace. I think since 2008, the average home, if you bought even pre-recession in 2008, home prices are up, I believe, 85%, 90% since then. So by not panicking, not selling, hold, trust your program. Ideally, if history repeats itself, you're going to make out okay on this.
Well, the government has also put in a ton of programs to ensure that, this stays propped up so that, we don't suffer like we have in the past, or at least we try not to. We're also looking at a goal of bringing in 351,000 permanent residences by the end of 2021. This is the highest we've seen in a century.
Right. Canada obviously wants to open up the borders, and they want to stimulate not only, the economy,
but paying back a lot of this debt too, right?
And as we know, the average immigrant who comes to Canada rents for 2 years prior to buying a home. So that will certainly help drive interest in that condo market again.
Totally. And we're just saying, look, prices for condos are going to soften for the next little bit, but there's going to be a buying opportunity here too, right? So be very, very aware of that, and it's coming.
And as always, real estate is about the long game.
That's right.
Right. Again, if you look back to the 2008 example, the longer you hold, generally, the better you're going to do. But don't panic and focus on the long-term gains here.
Totally.
So thank you again so much for listening. Thanks to everyone in attendance here. Ryan and I, we specialize in matching real estate investment properties to people's long-term financial goals.
Totally. And if you guys are interested in your specific area, Dan and I actually do a podcast every week where we update all of our local listeners to what's going on in their respective markets. And we would highly encourage you to reach out to us to find out what's happening in the areas you're interested in.
Perfect. Thank you again.
Amazing presentation, guys. Thank you so much for sharing with us. What I love most